Subscribe and get free vouchers.
Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on the Lal Street. I am Suyash Maheshwari. With me is Amit Ranjan. And it's a Tuesday morning and the markets, they continue on their road to recovery. Another 100-point plus gap up opening for Nifty this morning, and the index now has recovered close to 650 points from its April low of 21,777. I mean, what's more is that the global cues, which were actually the main reason why the market gave up and corrected as much as it did, they have turned much more supportive this morning, Amit.
Good morning, Suyash. It's green everywhere, and it is a big week, earnings week, with large Magnificent 7 mega caps due to announce their earnings. Tesla, Meta, all of them will be announcing their earnings this week. Markets are looking towards them. The recent slump in S&P 500 was led by Tesla and AI related names. But today it is green. Dow Jones closed in the positive at 0.67%. S&P 500 in the positive at 0.87%. Nasdaq Composite 1.11% in the positive. Stock 600 in the European market in the positive 0.60%. Hang Seng this morning is in the positive at 1.65%. And Nikkei 2 is in the positive at 0.21%. So it's a sea of green everywhere, but Tesla closed in the negative. That was the odd one out.
Right, and I mean, Tesla has been a spoil sport for the US markets for the longest of time. But again, Wall Street has snapped out of its 6-day losing skid in this correction. By the way, the key indices, the three key indices, Dow, S&P 500 and Nasdaq, they broke below some of the key technical support. So perhaps this is some of a sort of a relief rally that we are seeing. But overall, like we said, at the start of the show, the market texture is looking much more positive. The US 10-year has softened slightly. It is close to 4.61% as we speak. The dollar index is essentially flat on a day-on-day basis. It is close to about 106.1 levels. There is a slight pickup in crude prices, but they are still holding below that $88 a barrel mark. But coming back home, I mean, what a recovery it has been. It started on Friday with a 400-point recovery from the day's low. And I mean, the following two sessions, Nifty has added close to 250 odd points. I think most of us were not anticipating such a strong pullback. Nifty, by the way, has now retraced 61.8% of the entire 1000 point drop from record high of 22,775 to the April low of 21,777. And I mean, the big question, of course, would now be, can this recovery continue? And to answer that, we have Soni Patnaik joining us from JM Financial. Thank you, Soni, for giving us time here on News 9. And what a phenomenal recovery it has been for our markets. I think, again, as I mentioned, none of us were anticipating such a strong pullback. But what's your sense of things from where we stand? Because I think 22,500 was a key hurdle for us in that in that recent surge to record high levels. Will that become a pain point again?
Hi, good morning, Suyash. Thank you so much for having me on the show. So I think, of course, last Friday it was quite a surprising recovery, and after breaking the support levels, the kind of recovery it showed, it was just important to understand that on a weekly basis, 22,000 level was defended, and from there we've just seen Nifty started rising from 22,100 to 22,300, 400 even today morning. So right now there's a sideways rate trend that can be seen in Nifty 22,250 to 22,400, 450, and only sustenance above 22,400, 450. You can see it further rising up to 22,600. So that could be the overall range for this week expiry, and it's more important for us to understand that how the rollovers are going to play out. So as of yesterday, starting day one of rollovers, Nifty has been quite in line with last series. There's nothing too much of a significant rollovers that we can see in Nifty, more of in line. So I think that's how the sideways trend can play out. There could be some surprising move coming in the last expiry day, I'm sorry. if we talk about Bank Nifty from here on, Bank Nifty, there's a supply zone, a congestion level of around 48,200 to 50. You can see, and fresh longs should only be initiated in Bank Nifty only above this congestion zone. So any move, any sustenance above 48,250 in spot, you can see Bank Nifty heading towards 49,000 also. It can retest those levels. There's just one positive line in Bank Nifty as of now. There's the support of 47,600, 47,500 is standing quite strongly when it comes to Bank Nifty. So maybe only look forward to initiate longs once the congestion zone is crossed.
All right, and Sony, we are also in the midst of the earnings season. Today we have Tata Consumer Products, Tata Elxsi, MCX among others that will report their Q4 report card. But the big one that was today was Reliance Industries that came out with its report cards, Q4 numbers yesterday. Amit, I'll come to you first. How are the numbers looking like? Because I think across vertical, the performance is essentially what the market was expecting, and a pre-tax income of 1 lakh crore. I mean, first Indian company to do so.
Yes, pre-tax income of over 1.1 lakh crore, the first Indian company to do so. Segment-wise, it was dominated by the oil to chemicals business. Strong demand of fuels globally has basically driven this. The revenue has grown year on year 11%, EBITDA 14.3%. Slight slump in net profits year on year, about 2%. The stock today is down about 8.35 points, 0.28%. Sony, what do we make of Reliance Industries from here? Is it a good time to just hold this stock and wait and watch? Their numbers are a sort of a mixed bag, though oil to chemicals has done well.
From technical point of view, it's not bad. If you have to hold it for maybe a medium to longer term period, then of course it's quite strong. It's a good level to even accumulate and initiate your longs. Short term view, there is a small hurdle around 3,020 odd levels, and only a move above this level, you can see it heading towards 3,100, which may happen so, but then you'll have to accumulate at these levels, and maybe any decline towards 2,900 to 2,850 is also a good level to accumulate. So hold the stock. The stock has got very strong support of 2,800 in medium term. So as long as it's not breaking the medium term 2,800, you can see it heading towards 3,100 plus levels also. So this could take around 3 to 4 months for the stock to just break out of its congestion zone.
Right, could take some time for Reliance Industries to break out of the congestion zone. But again, I mean, when has the results of Reliance Industries been an event on the stock price? The stock rarely, sees choppiness when the results come out. But a stock that did, plunge in fact over 9% yesterday and was a big mover because it disappointed, on the street expectations, was Persistent Systems. I mean, the single biggest drop since March 2018 after the company's report card fell short of analyst estimates. I think what hurt the sentiment more was the margin guidance for FY25, which the company says will be flat. Now, I mean, the stock, Sony, has staged a considerable rally over the years. In fact, I was reading this report that suggested that Persistent System is the best performer among all IT stocks during the Modi 2.0 regime. It has rallied by close to 1,100 points in that 5-year period. But from the record high, it's now down close to about 20%. Good time to enter, maybe?
See, Persistent, of course, once upon a time, this was a very strong performing, outperforming its peers also in the mid-cap Nifty space. And we've seen the stock has certainly, reached the highs of 4,400. And from those levels, of course, it has given a very significant correction. I think this could be a good level to start accumulating. This range of 3,500 to 3,400 could be more of a medium term play. On short term, I do not see much of a bounce back, but if you do get the range of 3,500 to 3,400, you can definitely go about accumulating in that range. And certainly the stock has the capacity to bounce back again towards 3750. I think only above this zone, you can see it heading, retesting the 4,000 plus levels. So as long as it's not breaking below 3,400 on closing basis, one can certainly look forward to accumulate.
Okay, and Sony, what are your recommendations for our investors today, your stock picks?
So the first would be in DLF. Today we've seen significant short covering. It started in the first 2 minutes, but then it converted into long build-up position. That's quite a strong move, and it can on charts also we can see a good breakout has come on intraday basis. So the stock can head towards 920, 930 odd levels, and keeping a very small stop loss of 880, the stock can move head towards 930, 35. So that will be the first pick. The stock can be a positional play, from current levels. Also, you can buy, and on any small declines up to 890 can be bought. The second would be from the pharma space. We've seen Laurus Labs. Laurus Labs is showing good momentum today. And from current level, you can see it is trying to give a good breakout. So keeping a stop loss of 425, Laurus Labs can head towards 450, 455. The stock is giving a good intraday breakout plus good positions getting added up. So these are the two stop picks. The third pick would be in MCX. Of course, I do understand that, the results are due today, but MCX has given that breakout on charts. And on yesterday also, it was building quite strong long build-up positions. Today also, we can see it is just adding to the positions, and the stock has given an option chain breakout above 4,000. So the stock on a positional basis can test 4,200, and one can buy in current levels, and on any declines up to 3,980 can also be bought. Keep a stop loss of 3,600 and a target of 4,200 as the first target. Any sustenance above 4,200, you can see the stock heading towards 4,500. So this becomes a seasonal series play for the entire May series.
All right, those are the short-term trading ideas from Soni Patnaik. Ma'am, thank you for giving us time here on News 9. Always a pleasure speaking with you.
Likewise, thank you.
There are around 6 lakh Indian voters who are over 100 years old. These centenarians have witnessed a struggle for independence and the partition. From voting in the first election of independent India to the 2024 Lok Sabha elections, their enthusiasm to vote continues to inspire. News 9 Plus, the world's first news OTT, brings you 100 and voting. Catch the documentary tonight only on News 9 Plus app. Stay ahead of the curve.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
The winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
So have you been a rebel with a cause?
There was a sense of responsibility. There was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
There's a new video around what deepfake can do.
We had seen a trailer of this a few days back.
Rumors should not be only on the platform.
We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth.
$20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation,
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
Welcome back. You're watching First Take here on News 9, and before we move on to our second guest, let's look at how the markets are doing, because Nifty has fallen slightly from from the day's high. It's currently holding below the 21,400 levels. It's just marginally shy of it, but again the recovery has been rather strong. Remember, Nifty has managed to stage a recovery of nearly 650 points in just 3 sessions. I mean, Friday we had made a low of 21,777. Currently we are hovering just below the 22,400 mark. I mean, what a tremendous recovery for the markets in that last 2-3 trading sessions. And the mid cap space, the broader market, especially the mid caps, they were hurting, but they were able to snap out of their losing streak yesterday, and again they are building on to that this morning as well. Mid cap index is up 0.5%. It's closing in on 49,400 levels, just about 8 points shy of it. But again, I mean, this big figure and this this major drop in India VIX, I think that is somewhat surprising. 18% almost it's down. India VIX is back towards at 10.5 odd levels. I mean, what is the market so certain about all of a sudden? Are they expecting that the worst is over in as far as the global headwinds are concerned? Are they anticipating that the tensions won't escalate from here on between Israel and Iran? To answer that, let's also bring on board Mr. Ambrish Balega. Sir, thank you for joining us here on News 9, and I want to ask you about this massive drop that we are seeing in India VIX today, 17.5% drop this morning. What do you think the market is certainly so sure about? Do you think that they are anticipating that the worst is over in West Asia, and the earnings season is going to be good, and the ride up is going to be rather less volatile and a smooth slow and steady rise from here on?
Possibly, because see, I mean, the markets have turned extremely volatile because of the geopolitical issues which were there. But then, if you see in the last 2 or 3 days, there is not much of news coming from there, so it's assumed that things would calm down, and certainly things will not get worse from here. And because of which we have seen the markets bounce back, and the earnings season has started. I mean, we have seen some decent sort of earnings initially. Even Reliance yesterday was quite decent. So I think from that point of view, at least till the beginning of June, I don't think there are too many headwinds as such, although you will keep getting some news or the other as far as elections is concerned. But I think people will wait till the first week of June, like when the election results are announced. I think it's only post that you will see a huge volatility. And I mean, as far as the levels are concerned for the market, I think like we have seen an extremely good bounce back, which clearly shows that the confidence and sentiment is positive. But then technically, I think 22,500, 22,600 is a major sort of a resistance level. I think going beyond that could be a bit difficult, but if it goes beyond that, we could actually see 23,500 quite soon. But the question is, I think you should watch out for this levels of 22,500, 600. I mean, if that is breached, then yes, I think you should again turn quite bullish. But as of now, I think that the markets are in this range of about 22,000 to 20,500.
All right, 25,600, 22,500 could be the litmus test for Nifty. if it passes that, it could move beyond perhaps to 23,500. I mean, interesting view coming from you, sir, who traditionally has shared a contrarian view on the market, and because the market has been on a bull run. Because of this volatility and what's going on in West Asia, gold has done phenomenally well among commodities, but gold isn't alone in its bull run in 2024. In fact, silver, zinc, other commodities, nickel, aluminium also comes to mind. They have hit multi-month high. I mean, should one add them in their portfolio, and what would be the best way to perhaps, for retail investors to gain exposure in such commodities?
I think, see, for the retail investors, I think the only commodity they should be looking at is gold, because I surely will not suggest the other commodities because they are meant for the HNIs or institutions or corporates. It's not really meant for retail. But if you look at gold, again, it's moved up quite sharply because, thanks to the geopolitical issues which are there. But then I think at these levels, I don't see too much of an upset from here immediately. Although you have figures of 1.3 lakhs and 1.5 lakhs coming for gold in the year 2030. But then even if that is true, you could still see a dip before that sort of a move. Because what we have seen in gold, if you see the last 20-30 years, it moves very sharply in a block of, say, 12 months or 15 months, and post that you see it either turning flat or negative over a slightly longer period. So I think that move is already done, and could see a dip or a sideways movement for a while before the next move up. So it doesn't make sense for investors to buy in right now and wait it out. It's better to invest somewhere else. Especially, if you're looking at short term, I would say equities. Like you rightly said, I'm a contrarian, but at this point of time, surely I will go with the move which is there in the market. And again, if you notice, I've been giving you technical levels, and I'm not really talking fundamentals, because I still feel fundamentally the markets are quite expensive as of now. And from an investment perspective, I'll not really invest in a big way. But from a trader's perspective, I think it's a great market.
All right. Since you are concerned about valuations, what should be the strategy? Maybe hold some cash from here on and let the dust settle till June 4. Let us get some clarity, or maybe wait till budget before allocating money, follow-up buying from here on.
No, I would say that one should be in cash to a certain extent. I would surely say 20-25% cash at this point of time. Because, like I said, fundamentally, it's quite difficult to justify these levels, especially in the mid cap and the small caps. Like large cap and blue chips, the valuations are decent. I would say slightly on the expensive side. But then, if the market's correct for whatever reason, post elections, even the large cap and the blue chips are, bound to fall. So I would say that hold on to about 20-25% cash. Wait for the election results, because I think the best is already discounted for. For example, people have already discounted 400 plus for BJP NDA Alliance. So in case that does not happen, you'll see a correction. And at the same time, we need to see as to how good the monsoons also are, because as of now, it's quite positive. People are talking of like normal monsoons, but in case there's an issue with that. So I think one should wait for the election results first. In case they are in line, even the markets are higher, I would still say buy at those levels. But right now, possibly hold on to some amount of cash.
All right, and commentary coming on monsoon is, of course, multiple weather forecasting agencies, they are expecting a normal monsoon this time around for India. So perhaps that could be another factor that could, perhaps lead to some bit of a rally from here on. But, budget, election results and monsoon, they are 2-3 months in the future. What's happening now is the Q4 earnings season. We have some big ones today: Tata, Elxsi, ICICI Prudential, M&M Financial Services and MCX. But the biggest will be Tata Consumers Product. Amit, I'll come to you first. What's the street expecting from the FMCG company?
Tata Consumers, yeah, big one, and it's all positive. Revenue is likely year on year likely to grow almost 11%, 10.3%. Profits up 8.6%, EBITDA up 16%. Now, the earnings are being led by the Indian foods and Indian beverages business, and the acquisitions seem to have done well for Tata Consumers. They acquired Organics India for 1900 crores, Capital Foods for 5100 crores, Nourishco is another company that they had acquired, which is basically growing at almost 35 to 40%. So the foods business and the beverages business, India beverages business, is leading their earnings, followed by the salt and the tea business, which were basically the earlier expected drivers. The stock, if I see today, is slightly down. Good morning, Mr. Balega. What do you make of Tata Consumers? The stock is close to its 52-week high,
right,
just about 8% away. Is it time to cash out, or is it time to basically hold for an ensuing rally in this?
No, I mean, I really don't see the stock moving up, based on the earnings, because the estimates which are there, show that the revenue possibly could be up about 10%, but possibly profits could be lower. I think that could be a bit concerning. Again, I think the estimates are anywhere between flat to about 7 to 8% down as far as net profits are concerned. So I think if it is this sort of earnings, then possibly we could see some correction after this move.
All right, Mr. Balega, please stay with us. It's time to take a short break. We have a lot more to discuss with you, so please stay with us.
Golf as a game, it is closest to the game that you call life.
You've got to use your mind. You cannot lose it.
The sharpest person is one who understands his limitations.
खुद ही को कर बुलंद इतना कि खुदा बंदे से पूछे कि तेरी रजा क्या है.
You might have a bad break after a good shot. You might have a good break after a bad shot. But the fact remains, you got to play the ball from where it lies.
Watch Jeev Milkha Singh on Duologue with Barun Das, streaming on News 9+.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की, अभी डाउनलोड करें।
Welcome back. You're watching First Stick here on News 9. And Mr. Balega, I'll come to you. And since we are discussing earnings, wanted to get your view on the management commentary coming in from the IT companies. I mean, apart from TCS, the guidance from Infy, Wipro, Persistent, they suggest flattish growth in FY25. I mean, it looks like another difficult year for our information technology companies, sir.
Looks like it, because if you remember, we are discussing about 3 or 4 months back on IT, and I had said possibly we should start looking at Q2 of FY25 to start buying into IT, because I was expecting that possibly post Q2 we could see like an up move as far as the prospects of the IT companies are concerned, the order flows. But now with this management commentary, I think that gets delayed further. I think we should possibly wait for Q4 of FY25 to really decide whether we should be getting into IT or not. So for the time being, I think one should keep the portfolio allocation as far as IT is concerned to the lowest level possible. I mean, earlier I used to have about 15 to 18% allocation for IT. I mean, that's been brought down to about 6% now.
All right, that's a major cut in the portfolio allocation. I mean, from 15 to 16% to about 6% now. It looks like it could be another difficult year as far as IT is concerned. But another company that I wanted to get your view on the results on was HDFC Bank, and especially the more than 3 times jump in provisioning. I mean, the management said that it wants to make the balance sheet more resilient, but some have speculated that there might be troubles brewing in the retail and the wholesale loan, because the margins have in fact fallen sharply over there. And I mean, considering that provisioning has increased substantially and profits, they have only jumped by about 3% or so. Could it be a bit of earnings smoothing from the management, sir? What's your view?
Yeah, that's possible because I think a decent amount of cleaning up was being done. Clearly, I mean, post the like the mega merger. I mean, I think this is the last bit of cleaning up which has happened. I don't think that we'll see continued higher provisioning post this quarter. So I'll not really be too worried as far as HDFC Bank is concerned. If there's a correction, if it possibly falls to levels of about 1450, 1460, I think that's a good level to again start buying.
Alright, that's a view on HDFC Bank. Sir, thank you for giving us time here on News 9. Always great insights from you. But before we wrap things up, let's look at how the markets are doing, because we are seeing good recovery this morning. In fact, a continuation of what started on Friday. Remember, on Friday, Nifty had made a low of about 21,777. That was April's low. From there on Friday itself, by the way, we bounced back by about 400 odd points on Nifty. Then on yesterday, another 100 points, another 100 points today as well. So about 650 points Nifty has recovered in just 3 sessions. I mean, Nifty is currently above the 22,400 levels, and as Mr. Baliga and Sony pointed out, 22,500 could be a key resistance zone for the index going forward, and that could perhaps pose a hurdle in the short term. But if we are able to break above it, maybe the doors are open towards the record high, which currently sits at 22,775 and beyond that. And Mr. Baliga, who is by the way a contrarian, he projects Nifty could in this run up go up to 23,500 odd levels. I mean, that's a fair bit away. We are about 1,100 points away from his bullish case scenario target price. But again, Sensex is also making way towards the 74,000 mark. And another thing that I want to mention is that in the headliners, most of your heavyweights, they participated in the rally, whether it was ICICI Bank, HDFC Bank, Reliance Industries even, actually not HDFC Bank, ICICI, Axis and Reliance Industries. And HDFC was the sole reason that the Nifty gains were capped yesterday. But this morning HDFC Bank is also leading from the front. It is up about 0.5% as we speak. So perhaps HDFC Bank, I mean, after that the results came out, a lot of us were predicting that the stock could perhaps correct by about 2 to 3% and once again enter that range that it had slogged away in the last 6 months. But that has not been the case, at least so far. The stock corrected by about 1% yesterday, but again this morning we are seeing a bit of a bounce back in HDFC Bank. So that could be a key driver for the markets going ahead. And Reliance Industries, of course, another one. Again, the results, they were largely what the street was expecting. I mean, Reliance results largely is a non-event for a company. I mean, this as big as Reliance Industries, you will not expect the profits to jump by 2x, 3x. That happens only in the case of micro cap company. That's why micro caps, small caps and some mid caps also, and that's why these stocks are like very volatile and they are very reactive to the earnings. But for a company as big as Reliance, earnings is not really a big stock mover. It's the guidance and the commentary and the projections coming out from Reliance Industries management that the street keeps a close eye on. And again, time and again the management has said that from they are currently at about a 20 lakh crore market cap, just slightly below it, which by the way makes Reliance the first Indian company to be at that market cap of 20 lakh crore. Their projections is to make it double by in the next 5 years and take it to 40 lakh crore. So that perhaps gives us a CAGR of about close to 15%, which is sort of reasonable to expect from a company like this in a country like India, which is growing at 7 to 8% GDP growth rate. But coming back to HDFC Bank as well, because when HDFC Bank is not able to move, Nifty of course doesn't move, but Nifty Bank also can't, the gains on upside are also capped because of HDFC Bank on, Nifty Bank. But Nifty Bank this morning is again up 0.3%. It has taken out 48,000 a level. It has struggled to, break above in the last 4-5 sessions. But again, 48,000, one needs to, the index needs to hold above 48,000 for further upside from here on. So Nifty Bank will be the key for more upside for Nifty, and in that HDFC Bank perhaps hold the key. That could be a major driver for the markets going forward. But that's enough from us. But remember, there are around 6 lakh Indian voters who are over 100 years old. These Senatarians have witnessed the struggle for independence and partition, from voting in the first election of independent India to the 2024 Lok Sabha elections. Their enthusiasm to vote continues to inspire. News 9 Plus, the world's first news OTT, brings you 100 and voting. Catch the documentary tonight only on the News 9 Plus app. Stay ahead of the curve.